Welcome to this executive intelligence briefing. Today, we're diving into a single, palpable tension that's defining the entire landscape.
And all of our analysis is grounded in the source material from one specific day, February 6th, 2026. So, let's see what that world looked like. On one side of the ledger, you have this number, 18%. This represents pure, unadulterated ambition. It's the new target U.S. tariff on Indian goods, a huge policy goal that's moving at lightning speed. But on the other side, you have this number, which represents a much harsher reality, a net loss of nearly 3,500 crore rupees for Tata Motors. And what caused it? A single cyber attack at one subsidiary that completely wiped out an otherwise strong quarter, exposing a really deep systemic fragility. So you've got ambition on one side, fragility on the other. And that brings us to the golden thread for today's briefing, execution. It's all about that critical and frankly widening gap between a big strategic vision and the actual nuts and bolts capacity to make it happen. Bottom line, the central tension today is a race between policy ambition and operational fragility. Now we turn to the deep dives. Let's examine 3 front-page realities that are really defining this landscape. First up, a major trade deal between India and the U.S. is suddenly moving at an incredibly aggressive pace. So what's the event? India's Commerce Minister has put a hard timeline on the table. A joint statement with the U.S. will be signed in the next 4 to 5 days. Now, this isn't just talk. This is a very real, very near-term trigger for a massive trade agreement. Okay, but here's where it gets tricky, and this is why it matters. Look at how this is structured. The U.S. can slash its tariffs from a whopping 50% all the way down to 18% almost overnight, just by using an executive order. Simple. But India's side of the deal, that requires a formal legal agreement, which isn't expected until mid-March. So you have 2 clocks running at 2 different speeds. That's a huge deal for anyone trying to do commercial planning. Here's a way to think about it. It's like 2 chefs who agree on a fantastic menu. The American chef can start cooking right away. But the Indian chef, well, they're still waiting for the permit to build the kitchen. That gap is where all the risk and all the execution challenges lie for business. So, what should you be watching? Number 1, the trigger. Does that joint statement actually get signed in the next few days? If it does, you need to prepare for a scenario where U.S. tariffs drop first, creating a temporary but very real market imbalance. And the final indicator of success? Watch to see if India delivers that legal agreement right on schedule by mid-March. All right, so just as this massive policy ambition is hitting the accelerator, a critical piece of the market's plumbing completely breaks down. This really shows the other side of our story, a stark failure in operational resilience. The National Securities Depository, the core system that makes sure when you buy a stock, you actually get the stock, and when you sell, you get your money, it had a major technical glitch. For 2 days, that fundamental promise of the market was broken. This wasn't some minor IT hiccup. It meant real investors didn't get their shares or their cash, and for short-term traders whose entire business relies on timely settlement, it was incredibly risky. Think of it this way. This was a failure of the market's last-mile delivery. The product was sold online, the transaction went through, but the delivery truck broke down. The customer is left with nothing. When that happens, trust in the whole system starts to wear thin. So, what do we watch now? Well, the obvious trigger is the full restoration of operations, but that's just the start. The real scenario to plan for is the knock-on effect, a huge backlog of settlements that creates a reconciliation nightmare for days, even weeks. The true indicator that things are back to normal won't be a press release. It'll be when the payout sequence is back to its boring, predictable, everyday rhythm. And for our final deep dive, we see what happens when these security failures hit the bottom line hard. The headline was "The Shocking Loss at Tata Motors," but the story behind it is what really matters. The documents say that loss was significantly driven by a cyber incident at Jaguar Land Rover in the UK. Just think about that for a second. The company's massive domestic operations were performing well, but all of that was completely erased by a single point of failure in one subsidiary overseas. This is the proof. Cyber risk is no longer just an IT problem. It's a direct driver of your quarterly profit and loss statement. The perfect analogy here is a stadium blackout during the final seconds of a championship game. The home team is about to score the winning touchdown, and suddenly the lights go out. That single point of failure didn't just stop the game, it plunged the entire result into darkness. So looking ahead, we need to watch for specific recovery milestones from JLR. The real risk here is that this isn't a one-off hit, but something that creates volatility for quarters to come. The indicator to watch for will be in the fine print of the next earnings call. Do they explicitly link their financial performance to the recovery, or are they still in the dark? Bottom line, these events show that strategic ambition is being tested daily by execution risk in markets, security, and policy implementation. Now we turn to the systemic shifts, because beyond the headlines, there are systemic shifts to watch. We're going to look at 4 key areas that are being reshaped by this tension between ambition and fragility. Let's start with business and markets. The big driver here is that reliability and security are no longer just back office issues. They are now actively shaping market confidence and quarterly earnings. That exposes companies to direct hits on their reputation and their balance sheet. And the forward implication is clear. Resilience and business continuity are now mandatory conversations for the board of directors. They are central to delivering a stable, predictable quarter. In the economy, the driver is urgency. Governments are using trade deals and industrial policy as immediate tools to spark growth. This puts huge pressure on exporters trying to plan, and it means logistics companies are facing sudden shifts in where they source from. Going forward, expect national growth stories to be tied less to big promises and more to hard numbers around production capacity and flawless execution. On the geopolitical front, we're seeing stability being shaped by 2 different forces at the same time. On one hand, you have formal government agreements. On the other, you have informal, community-led disruptions. This exposes any business operating in these regions to risk from both sides. The takeaway? You have to plan for regional volatility by watching not just the official government channels, but the informal, on-the-ground power structures as well. And finally, technology. It's playing a dual role. It's a massive vulnerability, like we saw with Tata Motors, but it's also a tool for completely reshaping markets, like with new cooperative ride-hailing apps. This means cyber readiness isn't just a good idea anymore, it's a core requirement for survival. And you have to monitor these new platform models as serious market disruptors. Bottom line, the ambition-fragility tension is not just in headlines. It is reshaping the fundamental operating assumptions across the business, economic, and security landscape. Now we turn to the radar. Let's look at a couple of weak signals just starting to appear. 2 early signals of future change caught our eye in this document set. First, a new cooperative-run ride-hailing platform has launched with a 3-year pan-India plan. It's a small signal, but it points to a potential shift in how these platforms are governed, which could really challenge the commission models of the big players. Second, a 10,000 crore rupee program to start building shipping containers domestically with mandates for using local content. This is industrial policy and the theme of execution in action. Bottom line, these signals suggest the execution challenge is expanding into new domains of platform competition and industrial self-reliance. Now we turn to the executive synthesis. Let's bring it all together. It's time to synthesize this entire landscape and tie it back to our central theme. So here's the situation now, in a nutshell. What's accelerating? Policy ambition, with very clear timelines on big trade deals, and industrial strategy, with defined programs to build things at home. But what's persisting? Operational fragility in our most critical market infrastructure and security risks that are no longer theoretical. They are turning into direct, material, financial losses. And this all leaves us with one single, critical question that every leader needs to be asking right now. Is your organization's execution capacity actually ready for its ambition? Bottom line, the critical leadership challenge today is closing the gap between strategic intent and the ability to deliver reliably in a volatile environment.